Today I want to talk about PayPal. I'll give my opinion on their new tap to pay feature, as well as go over what the start of the year has looked like for PayPal. And finally, I'll give a price prediction for where PayPal could be trading a year from now if we see valuations of the company change. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. If you're a PayPal investor, you're familiar with the pain that has been suffered over the course of the last few years. In the last year alone, this stock is down over 22%, and in the last 5 years PayPal is down over 40%. From its all-time highs of over $300, the stock is down over 80%, and this is despite the fact that PayPal has grown their top line numbers very nicely. Back in 2018, they were bringing in a trailing 12-month revenue of $15.4 billion. Today that number has grown all the way up to $29.7 billion. The only downside to these numbers is that we have seen slowing growth rates over the course of the last 2 years. However, you have to keep in mind that over this time period, interest rates have increased in a massive way, thus curbing a little bit of spending from consumers. One of the ways PayPal is looking to get back to top line growth is through rolling out features to small businesses. They have shown a very high interest in what they can do to really engage small businesses better with their products. And one of the ways they look to do that right now is through a tap to pay feature. The tap to pay feature is now available on iPhones for all Venmo business profiles as well as PayPal Zettle users, and it enables these customers to use contactless card payments as well as digital wallet payments directly on their iPhones at no additional cost with no additional hardware. When I think about this technology and where it is most applicable, I immediately think of farmers markets. Today, most people when they go to a farmers market, they have to bring cash because a lot of vendors will only accept cash. Oftentimes, these other payment processors will have high fees that really turn off a lot of these small businesses. However, if you're talking about PayPal and they're adding on no additional fees and you don't need any hardware, just your iPhone, this is a perfect application for farmers markets. In 2022, total annual sales at farmers markets reached an estimated $1 billion. So this is a market that PayPal could get their foot into and really establish good relationships with small businesses. A lot of times I have seen at these farmers markets where people will go and if they run out of cash, they will stop buying things. However, if they can use their credit cards or even Venmo apps to buy products at farmers markets, this will not only encourage and grow these sales, but it will also help impact PayPal's top and bottom line. Along with Tap to Pay, PayPal has rolled out a number of other features to help re-engage customers as well as support small businesses. Some of those being PayPal Checkout and Fastlane, which offer biometrics like face and fingerprint to pay for items, as well as smart receipts. Smart receipts are a very interesting concept because basically they offer different coupons after a purchase is made to try and get customers coming back to a website and buying more items. And PayPal now even offers their own cashback system with PayPal Cash Pass. And I really like this move from PayPal because when people go out and they buy things at the gas station, restaurants, or even online, they're looking across their credit cards for what offers the best rewards in that situation. And if PayPal now offers their own rewards, they can encourage customers to use their systems more often. However, even with all of these new rollouts, PayPal's CEO offered very bleak guidance. They offered guidance of around $5.10 of EPS for 2024, which is down from what analysts expected of $5.53. And for Q1, they're only expecting revenue to grow by around 6.5% year over year. And right now, a lot of investors are assuming that PayPal is sandbagging their numbers. They're offering very conservative guidance so they can come in and beat expectations. However, with everyone assuming that PayPal is sandbagging their numbers, that means that they better come in and actually beat. If we see PayPal in the next couple of quarters come in either in line or even miss expectations, that could be very detrimental to the stock. And if we look at their growth rates for their top line over the course of the last year and a half, 6.5% would be the lowest rate we have seen since December of 2022. And this would be very concerning in my opinion. I think they need to put up numbers of at least 8% plus to really meet investors' expectations around revenue this upcoming quarter. And EPS estimates are similar because we can see that the average EPS estimate for 2024 is $5.06. When we we compare that to 2023 where they put up $5.10, this is a slight decline year over year, which I actually hate from PayPal. I think that they need to come in and blow these numbers out of the water, even beating the high EPS estimate of $5.24. I would love to see them putting up somewhere closer to $5.50 like analysts were originally expecting. And one of the ways they can achieve these results is by aggressively utilizing their buyback program. We can see that over the last couple of quarters, they have decreased their shares outstanding year over year by around 4 to even 5%. And if they can continue on this trend over the course of 2024, this will greatly help their EPS numbers. And even with these sandbagged EPS numbers, PayPal is trading at a relatively low valuation of an 11.53. And in my opinion, I think PayPal should be trading anywhere from a 15 to 20 forward P ratio. And based off the current P ratio and it trading up to one of those valuations, the stock could trade anywhere from $75 all the way up to $100, which would be anywhere from a 28% return all the way up to a 70% return. When I think of PayPal and what needs to happen over the course of the next year, I think of three things. The first being buybacks. I want to see them buy back a large portion of their shares, and this is something they have direct control over. When the valuation and the stock price is low like it currently is, they should be buying back a large portion of their shares to really help drive up their EPS numbers. The second thing is I want to see the company outperform on their top and bottom lines consistently over the course of the next year. If they're putting in low guidance for 2024, they need to prove that that is low guidance because investors are expecting it to be low guidance. So they need to come in and put in solid beats quarter after quarter and prove that those are low sandbag numbers, because right now expectations are that they are sandbagged, and that means that they need to come in and beat. Meeting expectations or even missing will be very bad for the stock price. And the third thing is something they don't have control over, but it is the Fed lowering interest rates. If the Fed lowers interest rates, especially on the back half of this year, we could start seeing valuations that investors are willing to pay for a company increase, and this will affect PayPal as well as the rest of the market. However, keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.